Hi everyone, welcome to today's video. So first and foremost, the markets have given a decisive breakout above 18,500 levels. If you have been following me for the last 6-7 months where I've been aggressively investing with all of you, you would be sitting in massive green profits right now. I'm also sitting, so I'm hoping that all of you would also be sitting. So this is definite good news for us. Now comes the next layer that, hey, I have more money to invest. Where do I go and invest? Are there any more opportunities left right now? Or should I wait and watch? Okay, so market always gives you good opportunities to invest irrespective of the market type. Right now also, I believe that the small cap and mid caps are at a great buying level. I will explain you the entire context around it, but please do not consider this as buying selling recommendation. I am just sharing my research with you. I am not going to give individual calls because whenever I speak about stock X, there is a way to build position in that particular stock. People just simply go that, okay, Akshat spoke about this stock. Let us sell our house and invest all that money in this particular new stock, which is a small cap stock and mid cap stock. Now, small cap, mid cap stocks are slightly dangerous in nature. Why? Because these are slightly more volatile. So there is a way to build position. I will try to do my best to explain all the details, nuances around it. In case you want to check out some of my small cases that I've made, these are absolutely free of cost. You can go and check these out in the description box and pinned comment. So let us kickstart our discussion and let me first and foremost help you understand technically why small caps and mid caps are at a great buying level even now. So to understand this, let me first and foremost show you the Nifty 50 chart. So for people who are complete beginners, Nifty 50 means the collection of top 50 companies in India. For example, these would be companies like HDFC Bank, TCS, etc., all big companies. They will come under Nifty 50. So here what you would notice is that for the last 1 year, the markets has been trading sideways and it has touched these resistance point. In case you don't understand what resistance is, it is cool. Don't worry too much about it. I've made a lot of videos in the past. Please go and rewind and watch it. You will understand this concept more. This resistance line has been tested 1, 2, 3, 4, 5, 6, and finally a breakout has happened. Now, a few months back, I had made a video that the Nifty is going to go from 18,500 all the way to 21,500. So that journey has started. But now the problem is that if you go and check HDFC Bank, Hindustan Unilever, Punjab National Bank, etc., all the stocks that I've spoken about previously and I had purchased it in bulk, and many of the community members would have purchased in bulk, they have all gone up massively from this point. And something like HDFC Bank and Hindustan Unilever is very close to its all-time high. So now comes the natural question that all these good companies are gone. Now where is the investment opportunity? So in order to understand that, let us go to the small cap index. So this is Nifty Small Cap 100. What does this mean? This is the collection of small cap companies. Now small cap is typically considered to be companies that have a market size of less than 5,000 crore. So these are the companies that will fall under this small cap domain. If you collect these top 100 small cap companies, you will see that they are still trading roughly at a discount of 18%. Now, if the small cap market just recovers, I'm not even saying that it beats its previous high. If it just simply recovers, how much gain you are likely to make? You are likely to make roughly 22% gain. And from this point, if the growth happens from 18,500 Nifty levels all the way to 21,500 Nifty levels, it is very likely that this number would rather become like 25-30% minimum. So this is the gain that you can definitely make by investing in small cap, mid cap stock. So this is the segmental opportunity that is there in the market currently. Now you'll say that, you know what, Akshat, every investor comes, they give us all this type of gyan, but how do we convert this into money? Have you ever done that? Yes, I have been speaking about blue chip companies which I've aggregated, which I was very comfortable disclosing with all of you because those are less risky. But when it comes to small cap companies, it's a slightly more dangerous play because small cap, mid cap companies are slightly more volatile. So you can check this post. So this is the YouTube member community section that I have started for slightly more sophisticated investors. And I spoke about a company recently which is called as VRL Logistics. And since the time I made this post, the company has gone up by roughly 10-12%. Similarly, I spoke about Jyoti Resins, which has given a massive gain since then. I had spoken about Delta Corp, which again was a very positive bet. Now you'll say that, okay, you're speaking just about wins. You would have lost money somewhere. Yes. So currently I'm on a notional loss on something called as NGL Fine Chemicals. Now the point that I'm telling you this story is very simple. That see guys, I mean, I would make investments in 10-15 stocks. Now out of all that, I would not have a success rate of more than 60%. That is how investing works. I'm not here claiming that whatever I say will definitely go and play out. These are all business estimates and calculated bets. Therefore, I feel very uncomfortable putting my head on the chopping block because if I talk about 2-3 stocks on this video, many people would make me morally responsible for getting gains from tomorrow onwards only. So I can't do that. I have this advanced conversation only with member community, but on this video, I will at least help people understand the broad macros of it. And I will use some examples. And these are some of the companies which I might be buying or selling. You make it out, but at least you will know the fundamental principle of picking small cap, mid cap stocks. So point number 2 that you need to understand about small and mid cap stocks is the historic returns that they typically give and in what fashion do they give returns. So for this, let me share 2 specific charts with you. So this shows the 10-year rolling returns of small cap stocks. So what you would notice is, so this dark gray line is small cap. This light gray line, right? I'm not sure if you're able to see this. This is mid cap, right? This red line is market Sensex, or you can call it Nifty line. It would approximately be the same. You can see that there is an alpha. Alpha means the above market return that small cap, mid cap stocks give. So for example, hypothetically speaking, if Nifty gives 12% return, then typically you will see that small and mid caps will give you around 16% return. There is a strong 3 to 4% alpha in small and mid cap. On top of this, if you can time the market really well, what is the meaning of timing the market? Right now, the small and mid cap are down by 18% from their peak, but Nifty 50 has fully recovered. So now is a good time to time the market for small and mid cap. And this data is from 2016 onwards. So what you would see is that there are periods. For example, this period is there when small and mid caps are suffering. This period is there when small and mid caps are suffering. This period, this period, this period, this period, this period. And when they run quite aggressively, right? So this is actually a bull period for small and mid cap stocks. So to cut the long story short, if you combine the first point and this point right now, you are sitting on a gold mine. And if you are patient and if you know how to build your position in small and mid cap stocks sensibly, it is very likely that you will make 25-30% return within 1 year if the markets stay positive. So I am also building a lot of positions in this, and I would encourage all of you to learn more about small and mid cap investing. Now you would say that, okay, Akshat, this is just your opinion. No, this is not just my opinion that mid cap and small cap stocks are doing well or are likely to do well from this point, at least for a year and a half. It is the opinion of even major investors in India. How do I know? So take a look at this particular chart. So this is the fund flow that you can see, and this red chart indicates that in the last 1 month, a large chunk of money has been deployed into mid and small cap category funds. If you compare it with the large cap fund, which are like blue chip companies, even mutual fund managers feel the returns might somewhat be saturated. So just to summarize, point 1 and 2, small cap, mid cap, great buying opportunity right now. Even DIIs are doing it. And if FIIs start investing aggressively again in the Indian market, very likely the small cap and mid cap rally is going to be sustained, and it is actually going to go up or blow up from this point. So then comes the natural question that, okay, how do I screen and find good mid cap, small cap stocks? Now this is very, very tough task. Why? Because the normal business parameters do not apply to small cap, mid cap companies. Now what am I saying? Let me explain it by taking you to screener. And if you're trying to create a screen, these are some of the good parameters that you will look at. Since you are screening mid cap, small cap companies, the market cap should be less than 1,000 crore, and the debt to equity ratio should be less than 30, and the sales growth at least in the last 3 years should be above 15, profit growth should be above 10, return on capital should be above 15. So now comes the natural question that, okay, fine, I want to invest in small cap, mid cap companies. How do I start my analysis? What are some of the key things that I need to take a look at? Okay, so let me discuss the case study of Kilpist India, which is a very interesting case study, and let me take you through the company and what type of a company it is. It is a small cap company. So the market cap is only 306 crore. What you will notice is that your ROCE is brilliant, 30%, right? This is amazing ROCE. Is it a low debt company? Yes, it is amazing. It has like literally close to 0% debt. Return on equity is like 22.6%. Wonderful. This is amazing. Is there any pledged percentage? The answer is no, there is nothing. So what about sales and profit numbers? So you'll see that, okay, in 2019, it was 23. Then it went all the way up to 227. Now it is at 81. So these are not bad numbers at all. And is the company profitable? So yes, amazingly profitable, right? 10 crores of profit here, 152 crores, 43 crores, etc., etc. So let's assume that you're only getting the data till 2021 and you're sitting here trying to analyze the company. You will read this. You will get lalach in your eyes and you will go and buy the company. So then what would happen? So here you are seeing that almost March onward you would have bought it, right? Somewhere around 531 oddish, right? And the stock went to almost 700. Okay, some profit. Then it crashed. It crashed by more than 50-60%. Now I know that many people are still holding this type of company, wondering what they should be doing with it. Now, if you don't have a nuanced viewpoint on small cap, mid cap stocks, don't invest. If you don't understand what is happening with the companies. So let me explain what was actually happening with the company and why did the stock price fall and what is it that you should be doing with these type of companies right now. So if you study the product mix of Kilpist India, what you will notice is that it makes almost 19% of its money from pesticides and 82% of its money in diagnostic kits. Okay, so this is very interesting. And these two are somewhat completely unrelated industries. So what the hell is happening here? So for this, you need to trust the media. So go on Business Standard and look at it. So all the info that was published that this small cap company has found its watershed moment in COVID-19 pandemic. This is positive news. So if you dig into this article, you will read the commentary of Dhirendra Dubey, who is the director of Kilpist India. And please read this because they have quoted him, okay? And read through this. Our agrochemicals business was running in an autopilot mode for decades. It was never a cash churning business. Agriculture in India is highly seasonal, this, that. We were never into big league, but we were somehow able to survive and diversify. Okay, so you get a very negative commentary about the core business of the company. Now, if you dig further into the article, what you will notice is that this company got into RT-PCR testing, and that was a diagnostic kit business. So this was a COVID-oriented business, that's it. So basically, this company ended up making crazy amount of money during COVID times. Even their own director says that, you know what, nothing happening here for our company. It's not as if that we are doing something great. It is not a cash cow for us. But we got an opportunity of RT-PCR testing. And here we were able to grow our business like crazy and make insane amount of money. Now tell me, if you are holding this stock at 350, 360 rupees right now, do you see the RT-PCR business surviving right now? So, okay, I hope you got the answer what you should be doing with this stock. I will not spell the answer for you. The important message here is that investing in small cap, mid cap companies is deeply complex. If you don't do the nitty-gritty analysis of the stocks, you are going to get badly trapped. Okay, so then comes the natural question that, okay, Akshat, then what help can we get from you in terms of identifying these small cap, mid caps? Now, I'll not tell you the names, but I will talk about certain themes and back it up with examples. So first and foremost, let me discuss the example of Tarsans. I'm not commenting whether this is a good business, bad business. I'll just talk about 3-4 basic points. You make your own judgment. So first and foremost, you need to take a look at ROCE, and this is sensible or not. Anything above 15% ROCE for small cap is considered to be good. Second key thing, the debt on a small cap company or a mid cap company, if it is on the higher side. When I say higher side, anything around 30% is also fine, and some case even like 100% debt is also fine, because small companies are looking for growth. And how will they grow it? If they actually are able to raise money. So it is okay for small cap companies to take on this debt, and therefore small cap and mid cap company becomes tricky. But the most important aspect of a small cap stock is that is it in a growth industry, right? Is the industry growing, and whether the firm has some kind of comparative advantage. For example, in Tarsans, they are making labware equipments, and it is making a special type of a labware equipment. Now, if you want, I'll do a detailed analysis of Tarsans sometime on some other video. They are making a special type of a labware equipment that is going to get more market traction. Studies in Europe, India has already been done, and it is one of the top 3 of those producers in India right now. So this seems like an industry or area which can grow. I'm not giving positive or negative reviews. I'm not putting my head on the chopping block. Also, one important point that you can notice from the pricing chart, the IPO had been launched in December of 2021. The price discovery of this particular stock is complete. So you have enough information about the price to go and do your analysis. Now you might take a look at its sales numbers and profit numbers, and you will be able to see that it is somewhat stagnating, and this becomes like a worry that, you know what, it is not growing at a rapid pace. Okay, so first and foremost, from 2020 it has already grown here. It's not as if that there has been some problem. Second key thing, who are Tarsans customer? Please go Google, figure it out. You yourself will be able to figure out the answer whether these numbers are sensible or not. Why? Because take a look at Divi's Lab, take a look at Dr. Lal Path Lab. All the stocks are down. They grew very aggressively between the period 2020-2021. Right now, they're not growing that aggressively. That does not mean that this industry is bad. It would continue to grow. And as these industries grow, something like Tarsans will grow with it. Okay, the second related example that I will give you will be of VRL Logistics. So this is a type of a logistics company. They own own their own truck fleets. This is the primary USP of the company. I am not doing a stock analysis. I am just picking an example so that I can talk about small cap, mid cap stocks. Now, what is the problem that you see with Ola, Uber? You will say, yaar, ride book karte hain, but cab nahi aati. That is the problem. No, that is not the problem. The problem is that Ola, Uber does not own its own cab. Therefore, there are such erratic operations, drivers not happy, all that stuff. Blue Smart. Now, if you have used Blue Smart Taxi, go and describe your experience of using it. Yes, it is expensive. Why? Because they mostly own their own fleet. VRL Logistics is doing something similar. They are owning their own truck fleet. They are growing their business organically, and there are several positive and negative points with the business. I will leave the conversation at that. Otherwise, it becomes an endorsement from my side, which I don't want to do. Third and finally, pick small cap, mid cap businesses that are going to find some kind of government support. What type of companies will find government support? Most likely manufacturing oriented companies, small cap, mid caps are going to find government oriented supports. If you're not seeing any of these three things happening, that a company like Tarsans, which is into growth product, or a company like VRL Logistics, which has some kind of competitive advantage, or a company that is getting some kind of government benefit, do not go and invest in that small cap, mid cap company. This is the basic filtration that you can do, if not much. And finally, most important point that you must understand is that small cap, mid cap stocks are volatile. They will move around quite aggressively. It makes no sense that, okay, great opportunity. Akshat spoke about these two stocks. I'm going to sell my house and invest all my money in these two stocks tomorrow because they are going to go by 25%. Please don't do that. I am saying that in a very unequivocal way. Now, what is the meaning of unequivocal? You can let me know. That is the word of the day for today. So please remember that these are volatile. If you're building positions, build positions slowly. Buy a range of small cap, mid cap stocks. If you are going it via mutual funds, they are going to charge you a lot of commissions for small cap, mid cap. So again, you can check one of the videos that I've done as to how to mirror a mutual fund when it comes to small cap, mid cap. So that is the next video that you could consider watching. I hope you enjoyed this video. Do press the like button and subscribe to this channel, and I will see you soon.